Ladies and gentlemen, good morning. Good morning. Thank you so much. A very warm greeting to each and every one of you. Welcome to our EPPF 2024-2025 annual results presentation. My name is Tembani Banjwa. I am your MC for this event. I am a proud retirement fund consultant at EPPF. I'm much more proud today being here with you here at Wheatbank, especially when I got to see a couple of familiar faces, and I'm also honored again to be able to engage with you going forward. To our live streaming audience, watching from across South Africa and from various places all over the world, I greet you with all warm South African salutations. Sanibonani, Dumelang, Goeiemorgen, Dimasheroni, Hey tada. Thank you for joining us on today's session and on joining us on our pensioners engagement. We are coming live from Wheatbank Emalahleni, right here in this house. And today we are joined by our EPPF's executive team. And I see everyone is excited to be here. Thank you so much to the executive team for joining us. And they will be here to present our 2024-2025 financial year results. Before I introduce them to you, I would like to ask you just for a quick attention and pay attention to our screens. Thank you.
In 1950, it didn't begin with a fund. It began with you. The hands that built, the hearts that gave, your dreams for tomorrow, even when today demanded everything of you. From your labor, your sacrifice, a promise was born that no matter what life brings, no one you care about will be left behind. And when loss comes suddenly and tomorrow feels stolen, that promise becomes your lifeline. Like you did for Nonhlanhla Montlane, a mother who lost a life partner far too soon, and discovered that through EPPF, she wasn't alone.
On the 21st of October 2005, Milton passed on. He was shot in an attempted car hijacking. My life just took a turn for the worst because his family just turned against me. They knew I was pregnant, kicked me out of the house. It was in 2006 when then the EPPF came back to me and said, you and your son are the rightful beneficiaries. Through this pension, I've seen and I still see Milton Senior providing for us from 6 feet underground.
Her story, it's one of thousands, but it's also yours. Proof that what was made in the past still carries us forward. It's also what defines this fund. A fund created to ensure that every member and their loved ones are cared for life. Because the promise isn't just in the numbers, it's in every choice made by you and with you. The staff will show up every day, not only to manage the fund, but to serve you with care, with stewardship, with trust.
I work with death claims and we ensure that their spouses, their life partners, their children gets the benefits that are due to them. And I think that is a promise that we keep even though our member has passed away.
This is one organization that should allow the member, the pensioner, to sleep at night. And when I become an ancestor, those who are remaining will continue enjoying the benefits.
Because service evolves and your life deserves care that grows with it. What began as papers stacked in files now lives in the palm of your hand, ready to support whenever you need it.
When I joined EPPF, a lot of the processes were manual, and then we started being able to automate processes such that members could even track where their applications were being processed.
An absolute beautiful memory was in the development of the client centricity, how the staff members embraced it and appreciated that they have been entrusted with pensioner monies in order to make sure that there's sustainability.
And here we are, more than 75 years later, a fund that began with a promise to protect you has grown into purpose.
I contemplated suicide so many times, but by the grace of God, I held it together. My son has never let his needs and wants are well taken care of, thanks to the fund.
Her story is not hers alone. It is the echo of your story too. It's the relief of knowing that if tomorrow comes too soon, you and your loved ones will be cared for. Your father who worked nights so you could study by day. Your mother who sacrificed today so you could dream of tomorrow. Your partner who stood by you knowing they'll always be cared for. And your child who carries your dreams further than you could go.
I've been a pensioner for the last 25 years and I've been treated superbly. The bonus they paid out in COVID, it was a godsend to many families.
If I were to describe the EPPF in one word, it would be resilient. I think it's remarkable that this institution has stood the test of time and remains a leading light in the pension fund industry.
It is your story. It is the story of our country. It is the story of those who came before you and the story of those who will come after. For more than 75 years, you have shaped this fund with your hopes, with your sacrifices, with your dreams. Made by generations.
The fund will continue to care. What is entrenched over 75 years, you don't lose. It becomes the DNA. That DNA will continue to serve the next generations.
Everybody who's contributed in the last 75 years has, contributed to the success of the fund. I think the fund is true to its mandate. I think it's true to its member, and you can't underestimate the value of that.
You've done it all for us. I shudder to think what was going to happen if it wasn't for this pension. But we are sustained, we are well taken care of. I am seeing Milton in action through the EPPF, and that on its own fills me with immense gratitude.
And for the next 75 years and beyond, we will continue to protect you, to care for you, to serve you for generations. EPPF, caring beyond tomorrow.
Ladies and gentlemen, that is why we are EPPF. Can you please give again a warm round of applause again, please? I couldn't get that one. All right. Before we can kick off today's agenda, just a couple of house rules. For evacuation and safety concerns, please just be mindful of the exits and in case of an emergency. And also, wherever you are, and also those who are streaming live, just also be mindful of your exits as well. And please note that we'll also be sharing today's presentation as well as the results. Sometime next week, we'll be able to confirm the details of when the presentation will be shared on our portal. So our portal is www.eppf.co.za. Ladies and gentlemen, it now gives me great pleasure to introduce to you our executive team. I must say, as a Mpumalanga team, we are also excited to have you here, especially in this setup of an engagement. As a member-centricity organization, it's important that we always engage with our members as part of our commitment in keeping up addressing issues that our members are facing. So we really appreciate having you here as our executive team. So with us today we have, thank you so much. With us today we have Mr. Shafiq Abrahams, our Chief Executive Officer. We have Ms. Sonia Sanderson, our Chief Investment Officer. Ms. Tandi Mashiko, our Chief Financial Officer. We have Mr. Ayanda Kaka, famously known as Mr. G, our Executive in Governance and Assurance. Ms. Yolisa Squinchi, our Executive in Information and Technology. We also have Mr. Joey Sanka, our Executive in Pension Administration. Ladies and gentlemen, I just want to share something quickly with you. Mr. Sanka is my boss. So should I not do well or do good on my way to you, he's your go-to person. But please don't tell him I told you so. And on that introduction, you'll get to hear our executive team. And we'd like to acknowledge our company secretary, Mr. Lebogang Mukhashwa, in our midst as well. With all that introduction of such big names, I hope you, ladies and gentlemen, still remember my name. Again, my name is Tembani Banjwa. I am your program director for today. All right. Thank you so much for our panel for coming up. For now, we'd like to invite Mr. Shafiq Abrahams to come in on stage and present to us today's overall of our performance. Thank you so much. Mr. Shafiq Abrahams.
Good morning. Sanibonani. Goeiemorgen. Dumelang. Good. Once again, a warm welcome to all of you. A special welcome to our members who have made the effort, both in person and online, to join us and to take time to join us. We are grateful for that. And we have the pleasure of sharing the integrated results with you. I'm joined by my teammates who will present some of the results and we'll take questions as well. Now, members, the 2024-2025 results are special. It takes place on the back of 75 years of existence of EPPF. Now, we don't take that lightly. We value the heritage, we value the traditions, and we value its purpose. And so this year we celebrate 75 years of caring, 75 years of community, 75 years of service to our members, and 75 years of sustainable retirement solutions. And so as we position, I want to keep that as the backdrop of our existence and our purpose. And so today we'll share the results for 2024-2025, which confirms our progress towards preserving that heritage, but also growing the fund from strength to strength. Let me also take the opportunity to thank Tembani for hosting us, Tembani, and for being the face of EPPF in Mpumalanga, and for leading the charge of caring as well. Thank you. Before I go through the Salient features of the results. Let me start by just recapping who we are and what we are about. And I think it's important for us to remember that our vision is to become a sustainable and retirement savings provider. And as I unpack this, I want you to do the performance appraisal for us and confirm whether we are achieving this vision of becoming a sustainable and trusted retirement savings provider. Our mission is to be member-centric, and I'm pleased that we could come to Mpumalanga and spend time with our members and celebrate the 75 years of heritage and of caring, but more importantly, for us to account to you of what we've achieved, where we're going, and also to highlight some of the challenges that we encounter along the way. But remaining member-centric is what our mission is about. Delivering sustainable results for our members is what we are about. And like we say, our purpose is about helping our members and their families enjoy a better financial future through caring. And so the sentiments expressed in the video embodies this brand. It embodies and symbolizes what we are about, and it creates a focus in the future of how we run the fund and how we continue to build the fund into the future. With that said, our values of caring and philosophies about customer centricity, like I said, it's about accountability and most importantly, acting in the interests of our members. And today is part of living that value of accountability and coming to share the results with you, engage with you, but also to understand what concerns you and where you would like us as a fund to go into the future. It's about resourcefulness. It's about being innovative. It's about being dynamic, resilient, and about being forward-thinking as well and future-centric. And most importantly, it's about embedding the essence and the behaviors of excellence in what we do. So we call this the caring philosophy at EPPF, and we express it through our services, our products, our behaviors, our leadership, and our thinking. Now, with that said, we've crafted 5 strategic objectives which help us lead the organization. The first thing for us is about you and creating peace of mind. We want you to know that you belong to a sustainable fund. Your future retirement benefits are secure. Your current benefits are secure, and that you can sleep well at night. And as I go through this presentation today, I hope to reinforce that through the data, through the audited results, and through the progress that we've made over the last year. Our second objective is to serve you with care, empathy, and excellence. And we don't take that lightly. Every day we try to see how can we do this better, how can we be more empathetic to our members, how can we move beyond just being transactional, but more caring in our behaviors? And how do we speed up our service levels, our turnaround times, so that you can have a feeling of doing business with ease at the EPPF? In everything we do, we want to positively impact all stakeholders and the communities in which we work. And I think Sonia and Tandi will unpack that a little bit more in detail. We lead the organization effectively and responsibly. So we want to give you the assurance that your trustees, who are the board of trustees, ourselves as executives of the fund, our staff, who are members of the fund, lead and operate in a way that's responsible, it's future-centric, it's governed well, and most importantly, inspires confidence within you and our stakeholders. And lastly, as we celebrate 75 years, we always need to be focused on securing the next 75 years for our members. And so how we see the future, how we prepare for the future, how we respond to the environment, and how do we position for the future is critical. And later in the presentation, I'll unpack that a little bit more. So with that said, I'm going to touch on a few numbers today. And Thandi and Sonia will unpack it in a little bit more detail. But when we reflect at the membership growth of the years, we are pleased that the in-service members have grown to 40,757 members and represents a 2.9, just under 3% growth. For many years, we saw a decline in active members as Eskom contained its growth in terms of employee numbers. But in the last year and a half, we saw some new growth, new employment coming through, and that helps us build the membership. Pensioners and beneficiaries have remained consistent around 40,450, and that's consistent with more or less with prior years. When we talk about servicing our members with care and excellence, it's important to understand how they feel about us. And so 5 years ago, we've implemented an independent survey which measures how our members feel about the fund, how their loyalty towards the fund, but also how they feel about the customer effort, how easy it is to deal with business, to do business with the fund, how satisfied they are with the fund, and how they feel in terms of fairness, being treated fairly with the fund. And we are pleased to see this number grow year on year. We grew from 59 last year to 64 in this financial year. And when we started measuring this number in 2021, that number was around 21. So we've grown over the years from 21 to 64 in the Net Promoter Score. It reflects to us and says to us, our members are happy and satisfied with the service, but we remain determined to continually improve that service level and never to become complacent with the results that we have. So we're quite pleased with the year-on-year improvement in member loyalty and satisfaction with the fund, but continue to try and get better every year. When it comes to growth in assets over the years, over the last financial year, we are pleased to note that the assets under management grew from 203.5 billion to just under 231 billion. So that's a significant growth. On a net basis, year-on-year assets have grown by 13.5%. And when Sonia comes and unpacks the results a little bit more, you'll see that has been a robust investment return for the financial year. Our one-year investment return is 16.2% or 16.19%, up from 9.7% last year. And that's a significant achievement as well. When we look at the 3-year numbers, because we understand that markets are going up and down and volatile, so we need to be able to see over a 3-year period, the fund delivered 13.3%, which is about 41% above the 9.4% that was delivered last year. Now, as employee numbers increase at Eskom, the active numbers increase in the in-service members. That, together with salary increases within Eskom, has resulted in contributions received increase year on year. And in 2025, we received about 4.8 billion worth of contributions from the employers, and that's a growth of 13%. Benefits paid during the year was 8.52 billion and is about 11% up on prior year. And that's made of three things in fact. Benefits paid is that as members move into pension year status, they start to withdraw some of the benefits that are on a lump sum basis or start to earn their pensions. 2, annual pension increases contribute to the increase in contributions. 3, we saw the introduction with two-pot system. Some of the contributions or payouts were made during the period as well. And I'll talk about two-pot later on as well. But what we want to say is this number is consistent with how we plan for the organization and how we see outflows happening over the future. So it's perfectly in line with our planning and understanding of what needs to be done, and so that's consistent. When it comes to pension increases, on 1 January 2024, the annual pension increase was 3.8%. And I'll talk about pension year increases a little bit later. And that's slightly lower than the prior year of 9%, where inflation was much higher, and we applied a catch-up in the prior year. But what we can say as the fund is that all pensions that have been paid since retirement, and at least in the last 20 years, are indexed to inflation. So what we've done over the years, we've gone back and we said, what would your pension be if you retired from date of retirement, and we matched it to inflation. So in other words, as you stand today, all pensions have been indexed to CPI since retirement. Now that has been a significant exercise over the years and quite a successful program over the years. And as we stand right now, we can say that pension increases are meeting the objective of CPI. At the same time, and I'll talk about it a bit later, we recognize that CPI may be not reflective of the cost of living of the average pensioner, and we are doing some work to understand that a little bit more, and I'll talk about that in a later slide. Last year, we've paid out bonuses of 276 million, and that was slightly lower than the prior year. But I have good news for you, that this year's bonuses will be slightly higher, but I want you to wait for that slide just yet. So when we reflect and we say, what is the message we want to tell you? And what is the bottom line we want you to leave today? Is the fund remains strong, it remains steady, it's growing from strength to strength, and as a member, you have nothing to be concerned about, but you can only take comfort that we continue to manage these levels of security in our funding level. So the funding level for 2024, 2025, which measures the ability of the assets to cover future liabilities, stands at 148%. Now that's quite a strong number, and we want you to know that 148% means that we can cover all liabilities and contingencies by 100% and still have surpluses of another 48%. So your pensions are really, really secure. And as long as we continue to run the fund on a prudent level, we'll continue to manage that comfort and security that we can provide. Now that's supported by some real great asset growth of around 16.2%, and the assets of around 231 billion that are able to support your liabilities. The second item I want you to know and message we want to leave is that we appreciate your engagement. We appreciate your comments, your feedback, your complaints, and we take it seriously. And over the years, we've heard you say to us, we want you to improve your turnaround times. You say to us, we want you to improve your communication. We want you to be able to communicate much more frequently, much more simplistically, and we want to know what's going on ahead of time. And over the years, we've improved our communication channels. We've introduced many more channels to communicate through and with you. We've introduced Facebook, we've introduced WhatsApp, different digital forms, video, podcasts, etc. At the same time, Tembani and all of his peers around the country have been engaging with our members daily. And for this year, we saw a 45% increase in the number of members that we've engaged. And that's our primary purpose, is to be in touch with our members, talk to our members, understand our members, let our members know what's happening at the fund, but most importantly is to create a community of purpose, a community of pride, and a community of security to say that as a collective membership, we are moving forward as the fund. And so as we dealt with Two-Pot in this financial year, there were new regulations which required us to allow active members some access to their savings. We managed to be able to implement those changes successfully, which saw 22,668 members apply for Two-Pot withdrawals within a week. Now, we do recognize sometimes that maybe not the best outcome for members, but at the same time, people who do have financial distress must be able to have some alleviation through these savings. So what we've done in 2024, 2025, we increased our financial education to members to support members around understanding the implications of withdrawing, understanding the compound interest effect at retirement, but also being cautious around making decision to access Two-Pot withdrawal. But nevertheless, all of our efforts have achieved what we aim to achieve, and we continue to build on the successes made through our financial education programs. Going into 2025, 2026, we'll continue to improve on financial education and planning as a service to members. Then lastly, we want to leave you with a message that for 2024, 2025, our investment returns have beaten targets. So we achieved those targets on a 1 year, a 3 year, and a 5 year number. So as a member, you can take comfort that 2024, 25 was another year of progress in service, another year of progress in investment performance, another year of progress in building a financially stable fund. Now, with that said, given the performance, given the design of the scheme, and given the pension increase policy of the fund, which is to target 100% of CPR. So on Monday, the board met and it concluded its decision for the 2026 increase, which will be 3.4%. Now that's based on CPI as at 30th September 2024. So what you will see coming through in your payslip on 1 January, for the payslip for 1 January 2026, will be an increase of 3.4%. At the same time, we usually pay an annual bonus of about 8,150. And in this month, and I think it's in December we'll pay bonus, we are pleased to say that we'll double that bonus to a total amount of 16,300. So what that means is all members who are pensioners will receive a bonus of 16,300. So we're pleased that we could afford that in this financial year. The last thing we want you to know is that when we look at pension year increases over the last since 2000, they average 5.7%. When we look at CPI over the last since 2000, that averages 5.5%. So our pension year increases continue to keep in line with inflation, and your pensions are, like I said, keeping track of inflation. But we recognize, and as I said, as the board deliberated on Monday, we will go back. We want to understand what does the pensioner inflation look like, what are the options available to us, what is cost of living looking like, and what can we consider. But we must say, as we do that, we want to remain responsible. We want to remain committed to ensuring that we can pay pensions for life. And I think that's important. So we're not going to take short-term shortcuts and populist approaches. We'll do what is right to ensure that you and your spouse can enjoy a pension for life. And that means that sometimes we have to be conservative and prudent. But let us go through that study and balance the understanding of the data that comes through that study versus what will be in the interest of ensuring a pension for life, and that means a sustainable fund. And when we conclude that, we'll come back and share and communicate that with you. But for now, what we're pleased to say is that we are quite happy to know that it's another year that we preserve the CPI increases and we preserve the purchasing power of pensions. So all in all, we want to leave you with that from my side. I'll come back to talk about what the future holds and how we see in the future. But I'm going to ask my colleagues to maybe unpack the detail for you. Thank you.
Good morning, everybody. It's really nice to meet everyone here, and I hope I have an opportunity afterwards to also say hi to everyone in person. My name is Sonja Saunderson. I'm the Chief Investment Officer at EPPF. So my job and the job of my teams is to look after your money on a daily basis, to make sure that we invest it responsibly within the markets and to make sure we do so, as Shafiq said, on a sustainable way, that we can sustain your income with all the promises that you saw on the screen this morning, but also to make sure that we maximize the opportunity for you, that we grow the fund as much as we can and as efficiently as we can. That's, of course, a great honor. It's a great responsibility, and I thank you for your support and also the trust that you afford us as an investment team to do that for you. Something we certainly don't take lightly. It's a responsibility we don't take for granted. And I assure you, something that we spend a lot of time on in the office, thinking in each and every decision, each and every day that we come into the office. How can we do right by the member? How can we do better for the member? How can we do better for you in terms of investing in the right places, managing the risks, understanding what's happening locally and globally in markets, and to navigate your investments in a responsible way. So I'm going to talk you through what that means from an investing environment perspective, first of all. If we look at the year that was, what were the things that affected the opportunity set, as we call it? So what were the things that helped us from a returns perspective, and what were the main challenges? And you can read through all of these things in your own time, and I'm sure a lot of it are things that you would know and the things that you would have followed on the news as well. But certainly if we look at where your assets are invested in South Africa as well as in other regions globally, from a global perspective, a lot of the news flow, a lot of the market performance, a lot of what was driving the returns in your funds were affected to a large extent by what was happening in the United States with President Trump talking about tariffs, the markets getting a bit scared of that, thinking that now everything is going to be more expensive because companies ultimately pass on those higher tariffs to their consumers, and that therefore, whether we're talking about cars or services or microchips or computers or bicycles or whatever, that the higher tariffs coming from the US and imposed on various countries will actually be fed through to the consumer, and as a result of that, companies won't perform that well because prices are going to go higher and therefore their profits are going to go lower. And so for a while during this year, we certainly saw a lot of volatility, a lot of uncertainty in the market, and a lot of the asset classes that we invest your assets in, therefore, had a lot of volatility in it. One day it was up, the next day it was down. It's always difficult for an investment team to invest in markets like that where there's not clear directionality. But what we managed to do is to stick true to our philosophy and our principles of managing the risk and diversifying across different market cycles, different asset classes, and different regions, to make sure that we protect you as much as possible. I'm sure you've heard of the principle of not putting your eggs in one basket, and it's really that same principles that we follow. There's certain legislative requirements on us as a pension fund for where we put your assets, but there's a whole science and research team of more than 20 people in the office in Johannesburg, actually and globally, that helps constantly research on behalf of you where are the best places where we can invest your money and how do we maximize the returns for you. So on the back of the tariff shocks, certainly globally, the various fiscal and policy decision makers had to decide what they're going to do. But because they managed to keep inflation intact, a lot of the market spectators saw, okay, well, it's not doomsday. Everything is not going to go to the dogs. And all of a sudden, people got a little bit more comfortable as President Trump started negotiating with various countries what was happening. And the policymakers followed an easing stance in terms of the interest rate cycle. A lot more confidence came back into the system, which meant that a lot of the asset classes, and specifically equity and property and things that we typically expect to appreciate and grow over time, actually performed better. So as a result of that, this year we could, on the global side of things, manage to get good returns for you from an equity perspective, so listed companies globally, as well as property or real estate, as well as in fixed income. We don't have a lot of exposure in the fixed income space for various reasons, but overall it was a good year with good performance delivery from a global perspective as a result. Just to give you a sense of the principle of not putting your eggs in one basket as I explained it, is behind me is a world map, as you can see. And each of those little dots represent areas in which we invest. I see some of those dots are very light, but it should give you a sense of us really looking for opportunities globally. There's quite a lot of your assets by design because the liability or the pension promise that we make to you sits in South Africa. We invest in South Africa to make sure that we can pay the basket of inflationary increases that Shafiq was giving the news on earlier. But we're also looking for growth and diversification and things that won't perform the same in all market conditions by investing in different market regions, and you can see some of that behind me. In South Africa, though, some of the news, again, that you would have seen and that you would have heard really talks to the fact that we continue to have our own struggles from an unemployment perspective. The South African Reserve Bank deciding whether the consumer is at a point where they can help the economy a little bit more by cutting interest rates, whether we can get our country back on a growth trajectory, which is important for us to do. We need to see our industries grow. We need to see less unemployment. We need to see opportunities for South Africans to contribute to an economy that is thriving. And a big part of that meant that we had to go and are still going through a lot of the policy reform stances that you would have seen from the Minister of Finance and from the Minister of Electricity. Certainly as employees or ex-employees at Eskom, I think you can also understand that the stability of the energy grid for South African companies is also important. So in all of those areas, South Africa managed to improve this year. South Africa managed to get off the grey listing from a global perspective. We also managed to upgrade our sovereign debt profile in the eyes of the world. Last week, that announcement came out. So overall, relatively positive news from a South African perspective, although all of us know that there are still lots of other challenges that we still need to address. But so overall, we saw a subdued growth, but overall markets performed relatively well over that time frame. What that therefore meant was, if I put up the performance, you will see that on the top are measuring our performance in the columns versus different periods. So the last 1 year period, the last 3 years up until the end of June, last 5 years up until the end of June, etc. And the first line there shows what we managed to deliver. So Shafiq showed that same number earlier at 16.2% fund return for the 1 year period. So you can look at it over different time frames depending on how markets are performing. We are exposed to markets a lot. And so when markets perform, we tend to perform better. And when markets do worse, we obviously also perform worse. But there's various other tools that we use to try and protect the fund to make sure that you as members get the positive growth so that your purchasing power, and with that I mean the headline inflation basket that my colleagues were referring to earlier as well, that you can continue to buy the same basket of goods easily by virtue of how we grow the fund. So our target is to grow currently with a CPI plus 4.5% target, as you can see there in the second row. And if you compare us versus our target, then you will see that we had a phenomenal year this year, thanks to the fact that global markets and local South African markets performed well. That's also why, in part, we managed to get you the double bonus this year. So we managed to honor our pension promise, but we also managed to give you an additional growth by virtue of the bonus. If you look at it over different time frames, it's different results depending on what happens. Some of this period over the longer term also has the COVID period in it and global financial crisis, etc. But to give you the message, that's really the bogey for us, is to make sure that we can maintain your purchasing power over time, and not just maintain it, but that we can grow it so that your quality of life is sustained, but that it also improves over time. So that's how we think about the investment management targets. Just a little bit more refined detail or more depth in the detail of where we place your assets. What I'm showing behind me is just a breakdown of the asset allocation. So where we put all of your assets. And again, you can see in that pie chart with all the different colors on it, that there's lots of different colors, and we therefore diversify across many different asset classes. Again, the principle of not putting your eggs in one basket is really sacrosanct in investment management, to try and make sure that we get you the best opportunities, but to protect you when one thing falls, that everything doesn't fall with it. Right, so you will see that there's a big chunk of exposure in South African equities as well as South African inflation-linked bonds. And for those of you that have an aptitude and an interest in the more technical components of what we do, that inflation-linked bond exposure is really to match the liability of a long-term profile like we have in this fund, meaning that over the long term we have to sustain being able to pay pensioners the income that we promise. And to do that, inflation-linked bonds in South Africa issued by our government with a long-term profile, a long-term duration, matches that. So that's why you see there's a big exposure to that. And the others are really complementary to make sure that we can honor the promise and we can grow your assets as much as possible. We remain positive on South Africa, but we also, in various asset classes, want to increase our global exposure. We're not arrogant enough to think that we can just do well investing in South Africa. So we're looking at interesting opportunities in unlisted spaces, for instance, globally in the US and in other markets where we feel we'll get good performance. Of course, what I talked about up until this point talks to the fact that we diversify where we invest for you, and that we manage the risk so that everything doesn't fall at the same time, as I said before. Another lever that we can pull, or another tool that we use as an investment management team on your behalf, is to control the costs. Now, Thandi is going to unpack the costs a little bit more as our Chief Financial Officer for you. But from my perspective, maybe just the message that we're quite proud of the fact that we managed to negotiate better prices on your behalf with fund managers locally as well as globally, to give you a more sustained income level over time by meeting this liability that we've been talking about, but to do so in a cheaper way. So that actually is part of the value that we're bringing, is to make sure that those costs are as low as possible and very closely monitored by our finance team and by our board. Lastly, I want to talk you just a little bit through our sustainability approach. Now, when you hear us talk about sustainability, you will always hear what Shafiq was saying, and I want to echo again, is that we care about the long-term financial sustainability of our members. It's important for us that you, your families, your dependents, your communities are sustained by the work that we do over the long term. How do we do that? Well, we've set out to achieve that by first and foremost recognizing that we do not want to think about the impact and the sustainability of markets without recognizing that it can come at the sacrifice of returns. And we never want to sacrifice any returns for you. We want to maximize your financial returns as much as possible. So that's the first thing to note, is there's an intersect between caring about our planet and the environment and where we invest assets as a result, thinking about how we can transform South Africa from a racial as well as a gender perspective, but making sure that we don't do so at the expense of financial returns. And that's what I'm trying to describe here, is we take a long-term, responsible and a sustainable approach to thinking how all of these things come together in how we make investment decisions for you. We've managed to do so by virtue of articulating it in different pillars and different focus areas for us going forward. One of the key areas that we are focused on is to figure out how climate change is going to impact companies' returns in South Africa as well as globally. If we can invest in companies that are more competitive than others, then we should do better for you. So to understand the dynamics between climate change, what the impact is on our economy, on our own companies within South Africa, and therefore the places where we are likely to invest on behalf of our members is critical for us to understand, because we can avoid any losses on your behalf and we can maximize again the return that we can get from you. So that's a key focus area. Another key focus area for us has been to really talk to companies in South Africa and abroad to understand what are they doing. What are they doing from a transformation perspective? What are they doing in terms of climate change? How do they think about gender diversity? How do they think about access to basic services of people that they service? Do they just look at the profit line, or do they actually invest with an intent to sustain life and community with how they manage their businesses? So that's a key component of what we do as well. We don't just invest on your behalf, but we also influence on your behalf. We are active in this space, and if you go and ask large companies in South Africa, you will certainly hear that as well, that EPPF comes and talks to them and influences them in terms of what's important for our members. Then I want to sort of end up with this slide, which is as part of our drivers, we realize that in our own industry, in the financial services industry, and more specifically in the asset management industry, so managers that manage your assets, we still are sitting with inequalities that's reflected from the old South Africa. Yes, we've done a lot of good work. A lot of progress has been made, also by our government, but we're not quite where we want to be. So it's critical for us when we choose an asset manager for you, when we talk to banks, when we work with stockbrokers. I mean, there's various parties that we deal with on a day-to-day basis. Also, when we look at the investee company, so when we invest your money in a Sasol or an MTN or a Vodacom or wherever, that we ask them about how they think about social justice. How do they invest with a social justice mindset? We don't do that, as I said before, at the expense of financial returns. We actually think that those will add to financial returns and make for more sustainable companies in future. So overall, I want to conclude there and hand over to my brilliant colleague, Tandy, in terms of the financial aspects. And I'd be very happy later on to answer any questions. But thank you again for the opportunity to share with you just very high level what's been happening in the markets and for entrusting us to be that fiduciary team for you to make sure that your assets grow over time. I'm very excited that we managed to deliver a very good year with great performance for you, and I look forward to more opportunities to engage on how we can be more effective for you in future. Thank you.
Good morning, everyone. My name is Tandi Machero. I am the Chief Financial Officer, and I'm really pleased to see all of you here today. As we mark 75 years of the fund's rich history, it's really encouraging to see where it's standing from a financial sustainability perspective. So we wouldn't be able to share the results that we're going to share with you today, or what Sonia and Shafiq have already touched on, without that loyalty and support from yourself. So thank you so much for continuing to support the fund. We really appreciate it. From a sustainability perspective, Sonia has touched on what we look at from an investment perspective, but she's also touched on the fact that it's all about you, our members. What we do is really centered around delivering sustainable services and sustainable pensions for you as our members. We have a strong governance who are also looking at the fund's own affairs. In addition to us being stewards in the different investee companies, we have a board structure that is well represented from a member perspective. These members ensure that they hear and represent you as members when it comes to decisions that will impact your financial performance, as well as sustainability of the pension promise. So rest assured that there's strong governance over the fund's affairs, and this team is accountable to you as members, but we have a strong board that also guides and supports us. Our Voice of the Member program that we run on an annual basis, and Tembani and the team also help us with that. Help us also to get direct insights from you as members. My colleagues have already touched on how we've been running the surveys on an annual basis, and every year we take the insights that come from that to enhance and improve the value offering to you as our members. And we really value this insight because while it is encouraging that we are improving year on year, we want to continue addressing all of your pain points. So how does this translate into value for the different members? With the input that comes from each survey that we conduct on an annual basis, we take time to review, to reflect, and to implement the necessary measures so that we can continue to enhance that service that we provide to you. In this particular year, we ran quite a number of programs with the call centers to try and engage with you as members. We also, through the walk-in centers, try to strengthen capacity so that they continue to be accessible to you. They can continue to service you, to enhance our service turnaround times, and to address some of those pain points that the 2024 survey provided for us. If we just look at a few of these initiatives without going into detail, there were 2 pod sessions that we ran across the country to try and create member awareness with the system. We do understand why it was implemented, but it was important for us to run these programs and to ensure that we support it from a resource perspective with the right financial resources so that they can be able to deliver proper advice, proper guidance to all of our members, and to help them and guide, ensuring that they make the right decisions. We also had increased member engagement sessions. We're reaching over 21,000 members over the financial year. We looked at targeted retirement engagements like this one, where we continue to meet with our pensioners to hear directly from yourselves. This, and among other things, help us to continue evolving and improving the value proposition for you members. Some of these results we see immediately, and it's coming through this improvement in satisfaction year on year. Shafiq has touched on the Net Promoter Score, which really talks to the loyalty of our members to the EPPF. This is members telling us directly that they would be able to recommend the EPPF as a retirement provider to other people. And it's really encouraging to see this sort of levels, which are quite high in the financial services industry. Our customer effort score, which measures our easiness of doing business, has also improved year on year across all the member segment. Again, we value all these insights. We value the time that you take to provide this feedback, and we continue to improve and evolve with that. When we look at the financial performance, it's also important to look at the membership profile because it does affect some of the results that we share with you today. And when we look at the fund, we had about 270 at the end of the financial year. And pleasingly, this has increased to 81,207. Shafiq has also touched on the key driver of that, which really came from the in-service members. This is encouraging for us because it allows us to continue growing assets of the fund and ensuring that we deliver the right pension benefit for you over the longer term. From a pensioner and deferred members, you'll see that slight reduction year on year. Our pensioners have gone down by about 0.47%, which is linked to the normal mortality rate, while deferred members and other beneficiaries reduced due to children coming to the age threshold. Tembani touched on earlier that after the age of 21, some of these children no longer qualify, so you'll see that reduction as a result of that. Moving on to contributions received. This, again, a pleasing performance year on year. We increased from 4.2 billion in the previous year to 4.8 billion, an increase of 12.9%. And we've highlighted that this is really because of the increase in actives coming from ESCOM, as well as annual increases in salaries. What is encouraging for us, I think, as a management team, is the additional voluntary member contributions that we see coming into the fund. Again, increasing by 70% to 129. For us, this is a confirmation that our members trust us and that they are willing to put their additional savings with us. We also saw transfers from other funds, which increased from 79 to 12.5 million. Again, another confirmation around the fund, as this, they could choose to accumulate their savings with any other provider, but they have chosen the fund. So we really appreciate that confirmation on confidence from our members, confirming, of course, that they are comfortable with how the fund is being managed, with how we are investing, and with how we are committing to the pension promise. If I turn now to benefits paid and accrued, this would be what we pay out to pensioners as well as our other beneficiaries. In the current year, we saw that increase of 10% to 8.5 billion. Shafiq touched on that majority of it was as a result of the implementation of two-pot, where we saw over 22,000 claims with about 585 million in withdrawal. Divorce payments have slightly reduced, while we've seen an increase in lump sum for new inceptions where new pensioners come on stream. I think maybe just to stress on the two-pot system, that this system was implemented to try and improve retirement savings by providing some cash for members who really need cash. But we are a DB fund, and it is really important for us to assure members that you are not affected at all by those who are withdrawing from their pots. The promise for you continues. Those members who would be impacted will be those who are accessing their pots. From a financial sustainability cash flow perspective, you'll also see that the 585 million is really insignificant. Turning to the investment assets that my colleague Sonia has taken quite a bit of time coloring for you. This year, we've grown assets by 13.5% from 203 billion to about 230.9 billion. The strong asset growth was supported by all the factors that Sonia painted in her presentation, but it's also important, it's not just markets. The investment team is continuously working and managing the portfolio to ensure that we manage the related risk. When you look at the one-year return, we landed at 16.19%. Again, a very good return compared to the previous years. And what's worth noting here is this return tends to be volatile year on year. We want members to understand that while we are encouraged and we are excited about the one-year return, there's still a lot of volatility that drives that return. And for us as a pension fund, we continue to focus on the long-term returns because that allows us to deliver the right return profile to support the pension promise. So while it is exciting to see this sort of returns, we continue to look at over the longer term, and Sonia has given you some numbers to show that over the longer term, those returns do stabilize, but they still meet our return commitment. Moving on to investment income. This is affected by the investment portfolio. So you'll see the significant increase from 17 billion to 31 billion in the current year is on the back of that strong financial return for the year. A lot of it would be fair value adjustments that are not yet realized, but in this particular year, we also realized about 15.9 billion from some portfolio tweaks, as well as part of the normal trading activity. That is also reinvested into the portfolio. Sonia has given you a bit of color on the work we do with the external asset managers. Again, our focus there is to try and give you a very competitive cost structure as our members. You'll see there that the investment management fees with external managers has grown by a moderate 4.8% despite the growth in assets. And this is on the back of those cost-effective investment strategies that the team has implemented. Overall, from a net cash flow, operating cash flow perspective, we've seen a substantial increase to 19.7 billion from the 8.4 billion in the previous year. Again, it was due to those realized gains when we made some portfolio ticks. If I move on to the operating expenses, it's also just important to note that we have end-to-end administration services, so the fund is self-administered, but 40% of our portfolio is also managed by the internal team. So the 445 million that you see on the screen would be an all-inclusive cost of both the investment management and the administration services. This represents 9% year on year, and is really affected by the annual increase of about 5%. But in addition, we had to allocate additional resources from a people, technology, and other enablement perspective to deliver two-pot, but also to support other growth initiatives of the fund. And it's also important that as the growth in assets, as we see the growth in assets, we capacitate the team internally with the right skills to assist with managing that. So some of that will be in support of that growth in assets. What we focus on as a fund is the total expense ratio. And there, our aim is to try and deliver the right service to you as members at a cost competitive structure. You will see that there has been a slight reduction from 58 bips in the previous year to 57 bips. Again, this is the efforts of the negotiations from the investment team perspective, as well as deliberate action on our side to manage the resources that we have prudently. So we are encouraged by this, and we believe it is a very cost competitive structure. It allows us to continue to provide a strong value proposition to you as our members at a structure that makes sense. On the actuarial liabilities and reserves, we do evaluation of the fund's actuarial liabilities on an annual basis, assisted by our fund actuary. You will see in the current year, we increased, liabilities increased from 117 billion to 128 billion. And this was really driven by the change in member demographics, with new actives joining the fund, as well as other demographics involving the different member segments. It is also impacted by the annual salary increase that comes through. We have sufficient reserves as well from a contingency perspective. There has been a slight reduction on in-service, as well as an increase on the pensioners. The pensioners' increase is really to support the liability obligations on the pensioner side. So when you look at that, relative to total assets at actuarial value, you sit with a surplus of 75 billion, which is up from the 60 billion that we reported in the previous year. For us, this is encouraging. It confirms the financial health, the strength of the fund, but it creates that buffer for us, as Shafiq covered earlier. So I think when you look at the results, you'll see that it's been generally a pleasing year, strong performance, backed by strong asset performance. Our financial health is strong and supported by the funding level, but there's also been a lot of work from the team to continue engaging with you as members, continue improving your member experience to ensure that we can improve, enhance, evolve, and sustain the value of your pension. So in conclusion, I would say this is really good results to mark the 75-year history of the fund. Thank you for your time. I'll hand over to Shafiq.
So wrap up. You want to wrap up now?
So, ladies and gentlemen, I think Tandi and Sonia have unpacked the detail. And if I could summarize it, like Tandi has said, we are pleased with the set of results, particularly in a year where we celebrate our 75th anniversary. It has been a set of results that confirm growth in assets from 203 billion to 231 billion, growth in the funding level, which provides security to you from 143% to 148%, growth in your loyalty and satisfaction in the fund from 59 to 64 on the Net Promoter Score. But most importantly, it's also growth in value. And that value is measured by the value of the product and the design of the benefit. We've benchmarked that with the industry, and we can tell you for sure the replacement ratios are leading, and at the cost of 57 basis points, it's one of the most cost-effective services and products you get in the market. So we're quite pleased with that set of results. But it's also most importantly embodied by the values and philosophy of caring and be part of a community and family called the EPPF. And we will continue to build on that as we move into the next financial year. Now, what are we navigating into the future, and what does the future look like that we have to deal with? It's about the Eskom unbundling, and as Eskom continues to bundle and bring in new companies and employers. In 2024, we admitted to the National Transmission Company of South Africa as an employer. And as that unbundling takes place, we'll introduce more employers into the fund. Two, it's about navigating the market volatility that Sonia has said. Markets have been volatile, but also acted in our favor in 2024. But we also must be prepared for the downside as well. And so the diversification and the robustness of the investment strategy needs to be sound. We've done a lot of work in the last financial year to tweak that and give us the confidence around the diversification and capability to weather storms. So we're quite comfortable, and that work continues to do that. But it's also about being able to navigate the legal and the regulatory framework. So in 2024, we introduced two-pot. We're preparing for what is called the Conduct of Financial Institutions Act, and we'll navigate that. But for us to look forward to the next 75 years, there's a few things we got to get right. One, the employee preference and remuneration package preference is changing. So Eskom as an employer rightfully is reviewing that, and I think most younger employees prefer choice, they prefer portability, and they want to move through their careers to many employers. So we got to review the product currently, which is the defined benefit scheme, together with Eskom, and to see does it match the preference of the current employee preference, and the future employee in that regard. So we're working to look at the DC product. We started it in prior years, like we reported, and that work has moved to the next level in tandem with Eskom as well. But to remain relevant through an evolving product remains critical for us. Lastly, it's about building capability internally. And like Tandy has said, the first thing is about having the right leadership. We onboarded the board in 2024, which has settled in well, and we are pleased that we could have some continuity with the board into 2028. And we continue to work with the board around instilling the governance at the next level, the value system within our organization and within our people, to care and lead with a future-centric view, remaining member-centric at all times. And so technology remains a key strategic play for us. And so our technology capability is critical. Attracting and retaining the right talent is critical for us. So we spend a lot of time bringing some of the capability in-house, and we remain a competitive employer. So we're quite proud to be acknowledged as a top employer for the third year in a row, and we'll continue to play in the labor market, talent market, so that we can attract the best talent. But ultimately, it's about building on the member centricity that we are about. And I think as we go into the future, there's one thing we want to remain robust, resolute, and confident about, is our commitment to care for you, your families, and your beneficiaries remains intact. We continue to build on the successes of the past, the strengths and gains that we've made, to elevate member centricity to the next level, expanding our service set, our communication effectiveness, our channels, and our engagement with you. That for us is what we're about, and keeping you at the center. Our commitment to care for you and your families remains cornerstone of what we do and what we're building into the future. So we want to assure you of that. Now, lastly, colleagues, before I take questions, let me just say, like Sonia has said, we got to thank you. As members, we want to thank you for the honor that we have to serve you, for the responsibility that's conferred upon us, which we don't take lightly. We're mindful that we have significant assets under our management, which comes with a lot of responsibility. So as the largest private-owned pension fund, we want to be able to serve you with full confidence, as well as to be able to be a leading light within the industry at large. And we do that daily. So we want to thank you firstly for that vote of confidence, for the trust, the support, the engagement, and most importantly, the relationship that we have with you. It will always be a center of who we are. The second thing, we want to thank the employer. We have great relationships for their support, their engagement, and our ability to work seamlessly and dynamically on issues. So to the ESCOM group and its executives, we're also very, very, very pleased with that. A board is critical, and we're only as good as our board. And so what we are able to do is, because of the insight and leadership that our board is provided to us, so we're mindful and grateful to the board. We want to thank them. And to our staff. I know we sign up to serve, we sign up and step up to a journey of progress, and most importantly, we sign up to a philosophy of caring. So to the 170 people at ESCOM Pension Fund, or Team EPPF as we call them, we are grateful for their contribution. And lastly, to the executive team. I know I put them on a lot of pressure, and there's a lot that comes out through the years, through the months and weeks that we work together. That doesn't come to the front line. But I think we can be exceptionally proud for the results that we have today, and that embodies and symbolizes our commitment to serve our members. So the executive team, thank you for that and for that contribution. With that said, I'm going to say thank you to Tembani. We'll take some questions before we close up.
Thank you to the executive team. Before we conclude, we have received numerous questions from the members. I will read them out for you and call an executive team to come up here and give us a response. First question comes from an in-service member, and they would like to understand what the highlight from a value perspective has been for active members. For that, I would like to call Mr. Ayanda Gaga to come up here, the executive in governance and assurance, to come here and respond.
Thank you, Tambani, and good morning, everyone. This is a very interesting question. And earlier, when we played the video, I was listening to one of the pensioners, Mr. Morgan, who says that he's been on retirement for 25 years. And that made me think, as an active member, what that means. And what I would implore our active members, and Mr. Morgan says that, be interested in your retirement. It may sound very far, but think about the fact that that time will arrive. And then the fund has very robust saving mechanisms that you can use to make sure that your retirement is as comfortable as it can get. And so one of the vehicles that we have in the fund is what is called Additional Voluntary Contribution Scheme, and Thandi spoke to it. It's such a wonderful saving mechanism where you can ask your HR to deduct more than the required contribution from your salary into the additional voluntary scheme. It grows with investment returns, and that scheme has done phenomenally over the years, and that can supplement your retirement income to make sure that when you retire, your pension is decent. And we know the EPPF pension is for life. Once you start, it carries on with that. And so I'd like to implore my fellow active members to think about this and utilize what is already in the fund. you get a tax deduction, and your retirement savings, as we know, are protected from creditors. And so this is a wonderful saving vehicle that we can all use as active members to make sure that when that time comes of retirement, we retire comfortable. We've heard from Tembani that our oldest member is 107 years old. And so you want to be 107 and retire on a decent and comfortable income. And that you can make happen today as an active member. Thank you.
Maybe just to add to Ayanda, and I think to the active member asking the question, I want us to go and ask what is the replacement ratio that you get to the EPPF versus the market? What is the cost that you'll pay at the EPPF versus the market? What is the service levels that you'll get at the EPPF versus the market? And what is the confidence factor as well? And if you take all of those dimensions and you do the research, I can assure you we're going to beat EPPF offers value on all of those dimensions. And it's something you need to do the research as well. So there's the value offering that comes out of EPPF.
Thank you, Shafiq. This one is a long one. It comes from a pensioner. They would like to find out how the fund is able to afford a 16,300 bonus for this year when other funds don't do this. He goes on further to say, also, since the market performance was good, why is the increase only at CPI? If the increases sometimes are less than CPI when the market performance is poor, yet only at the CPI when the performance is good, does that not indicate that pensioners will likely not keep the pace with inflation over time? Also, another related question to this one. Thank you for granting me a 3.4% increase on my pension. It is greatly appreciated. However, as you well know, the cost of living during the last year was at least double this amount. Will also be this year, apologies for that, will also be in the year to come. This small increase on lower income groups doesn't make a big difference, and we are getting poorer and poorer every year. But for the higher income groups, it certainly makes a big difference. Should the lower income groups not be granted a 10% or so increase more than the higher income groups to help them cope with a very expensive times we live in? For this question, I would like to call firstly Ms. Sonia Sanderson, and also if Ms. Tandi Mashiku can also come up as well, just to share. Thank you so much.
A very interesting question that we have been debating with our board as well, actually earlier this week. And I think Shafiq was referring to it earlier as well. That I think there's quite a lot of opinions and views on whether headline CPI is a true reflection of the increase in costs, living costs that a pensioner face. Currently, our increase policy is linked to headline CPI, and we have to stick to the rules of the fund. It's registered with the FSCA. We cannot simply change that because we feel it should be a higher number, but we're very well aware of the fact that that different groupings of our pensioners and different groupings within our member base will experience different levels of inflation and therefore different needs in terms of maintaining the quality of life that you have. For that reason, to the point that Shafiq was making earlier, we are doing a piece of research to view what pensioner inflation is and whether even there's a more finer grouping, whether it's per income group, as Tembani's question was alluding to, whether it's per region, whether there's different standards of living per region. but it's really a piece of work that we take serious in the context of our pension increase policy. For the time being, and to get to the first part of the question, for the time being, in recognition of the fact that despite the very good performance, we are allowed by virtue of our rules to afford an inflationary increase. That gives us the lever and the ability to increase on the bonus side. And I truly want to just share that with you. I sat on the board and it is a big point of reflection. How can we do right by our members? How can we take our set of financials and make the most for the pensioners in a year where we viewing the increase policy as something that maybe needs a bit of a review and potentially we can improve on, but we still want to be fair. We still want to make sure that, also as Shafiq said earlier, we don't just take all the spoils in one year and we spend it and then we don't have sustainability into the future. So how do we get the best of those balances? As a result of that, we were in a position, Tembani, to afford a double bonus this year, which we're very proud of. But maybe Tandi can also elaborate a bit just on the increase side of things, certainly a piece of work that we're doing. We think it's fair, and therefore in years, Shafiq showed that table, in years where inflation was higher, the inflationary increase also was higher, but the relative to inflation, so the relative to the basket of increases, it's very similar outcomes. But the question for us going forward is, with medical inflation being high, something that our board also brought up, and with other expenses that our members are facing, is CPI, headline CPI, so headline consumer price index, is that the best measure, or can we potentially look at changing that into the future? That's a broader piece of work that we're working on, but for now we're very proud of the fact that we at least have a lever in the bonus that can help us afford something more. Sorry, thanks, Tanya.
Thank you so much. Sonia, I think you've covered the additional point I wanted to make on the catch-up. When Shafiq presented earlier, you would have seen that long table of inflation over a longer period of time. And in 2024, we were able to catch up all pensioners on that date to CPI. So when we looked at the increase this year, despite the fact that the investment performance is spectacular, it's quite good, we were restricted by the pension increase policy, as Sonia has elaborated. It is work that we are doing to see how we can enhance that. But I think as of today, all pensioners are caught up on inflation. And for us, that bonus is really a way of making good on it. We know it's not enough, but we also understand that CPI that pensioners are subjected to is slightly higher than the normal CPI. There was a question on different CPI rates for different member groupings. I think the rules of the fund does not allow us to discriminate on members, unfortunately. So all members are entitled to similar defined benefit structures based on their pensionable service. And I think it's fair to also say that all members are subjected to the same inflation. So even the high earners would be affected by the same cost of living as everyone else. But we really appreciate the feedback because it does allow us to also reflect and see where there's possibility to improve. Thank you.
Thank you so much, Tandy, and thank you, Sonia. The next question, we have received quite a number of questions from various communication channels. There's a question that has come up. December is coming up. The member would like to find out what is the fund doing to ensure us as pensioners are safe from cyber scams. December is coming up, the bonus is coming up end of November, so we'd like to call Ms. Yolisa Squinchi, executive at IT, to come up and take this question. Thank you. A round of applause, please, for Ms. Yolisa Squinchi. Thank you so much.
Thank you, Tembani. Good afternoon, everyone. It's already afternoon. It's not only about December. At the fund, cybersecurity is one of the key strategic priorities from the board right up until to the technology level. So I'm starting at the board because I want to show how important it is for us to ensure that our members are protected, their data is protected. So the board has an oversight of what we do. It's not a technology thing. The executive manages what we do. So over the year and over the years, we've made sure that from a technology perspective, our environment is fully resilient. We have independent service providers that works with us, that are specialists in the field to ensure that what we do on a daily basis serves us right and protects everybody in the fund, including pensioners and active members. Now, we do assessments every quarter to look at our environment, to check our environment, how we govern it, how we operate the environment, and how we control it. And it has come on, the results have been positive quarter after quarter since we've started. Very importantly is cyber awareness and education. We do that every month. We send out educational emails. We make sure that our members are trained in cybersecurity. You would see on social media, on our LinkedIn as well, we make sure that we educate you so that you don't fall in the traps of cyber criminals. Now, December is coming up. Cyber criminals know you are going to get a bonus, know you are going to get an increase. As part of education, the fund will never ask for your personal details either on your email or either on SMS. If you receive such, hang on, call us and find out. Do not click on any link on any email that seems suspicious. If you don't trust it, leave it alone and call the fund. I always say, if your gut and you have a feeling that says, this does not look right, chances are it does not look right. Call us and ensure that the email is from us. You can open the link and what you should do next. Thank you very much.
Thank you so much. Yolisa, thank you so much for that question there. This question comes from an in-service member. He would like to know, how does the two-pot system affect my pension, my tax bracket, and will it reduce my years of service? Please, I would like to welcome my boss, Mr. Joey Sanka, and the executive in pension administration to come up and take this question. Thank you so much. A round of applause, please, for my boss. I'm hosting him in my province.
Thanks, Tembani. And good afternoon to everybody. I think that's a very interesting question as well. And Tembani, I must admit, you're trying hard. I'll give you that much. But colleagues, I think just to address the question from our in-service members, and I think this is a critical thing to understand as to first enable us to reiterate the fact that we know that the two-pot system that came about does not affect pensioners. It is really brought in play for our active members. And when government thought about it, there were two critical components that they had to bring into play. One is to ensure preservation, and the other is to ensure that they enable you in times of emergency. Now, when we look at emergency could mean something different for each and every one of you in the room. And there's never been something that has been put as guardrails that could say that emergency lies between this parameter and that parameter. There's no such thing. So each one has the ability to determine for him or herself as to what an emergency is and why they will go and withdraw monies from the retirement savings that has been made available. So just to enable an understanding of two-pot, you have your benefit. And as we know, we're a defined benefit fund. It's split between, it's calculated based on years of service and your pensionable salary when you go on retirement. And what we've done there is, or what the legislation has told us, is to split that into three pots, or what is commonly referred to as three components: your retirement component, your savings component, and your vested component. Now, last year, as at the 31st of August, 1st of September, when this went live, whatever money was retained or was available to you at that point in time was taken and safeguarded into what is called the vested component. So you never really lose that in any way or form. Whatever happens from the 1 September onwards, as the member contributes, the retirement component and the saving component gets built up. And the member is now allowed to withdraw monies from the savings component. So in this question that we've received, the member has somewhat taken out monies from the savings component, and his concern is, has my service been reduced? So in essence, the service continues because your retirement savings, the vested component, has not changed. That will continue to build. And as the time comes to retirement, we will still calculate the benefit on years of service and pensionable salary. So that's as a defined benefit fund. Yes, monies would be reduced based on the fact that you took out a component from the savings component when you needed it for that emergency circumstances. And our recommendation to you as our dear active member there, and all active members, is that when you do consider taking out monies from the savings component, there are critical things that you need to take into consideration. One, is it really an emergency or not, and how do you classify that? Seek financial advice. And thirdly, what we as a fund are currently busy with is bringing in a calculator that will enable you to input that amount of money and see how that will impact you from a retirement point of view. So we are putting mechanisms in place to enable you to understand that. We can never prevent you from taking out the monies, but we can only encourage you to make sure that you follow those requisite steps and preserve as much as you can as we move along. So we can enable you, and we're going to do that even further with financial education over this course of the financial year, and ensure that you're well more enriched with an understanding of the impact that it has on the benefit. There is no two ways about the fact that it does have an impact. It's how you control and manage that impact that enables you. The last mechanism that I could mention to you all is something that Mr. G mentioned and Shafiq mentioned, which is the additional voluntary contributions. When you sit with the financial advisor, or you sit with Tembani and team, and you understand the bit of counseling that comes with it, look at it from the perspective of saying, what can I do to enable the additional voluntary contributions? That is definitely a mechanism of recovery from the monies that has been withdrawn. And as we know, that when we calculate the retirement benefit, the additional voluntary contributions is taken into consideration. So I urge you, all members that have considered the withdrawal, and if you are thinking about the impact on retirement, look at that mechanism very carefully and understand whether that can be enabled on your side. Every rand makes an impact on the retirement at the end of the day. And as we know, the additional voluntary contributions does grow the investment performance. So yeah, that will definitely enable you in multiple facets in order for you to enforce a form of recovery from the monies that has been taken out. Thank you.
Thank you, Mr. Sanka. I'm just going to read just a couple of comments that we've also received from our members. One reads as follows: thank you to all involved by keeping our fund that strong. May you have a relaxing festive season and prosperous new year. God bless. That's one of the comments that let me just read it out. I think it's a thank you directed to our executive team. Another one, just a big thank you to Mr. Abrams and his team for the excellent service I always received from the pension fund. It is really much appreciated. Those are some of the messages that we receive from our chats. Ladies and gentlemen, we are almost at the end of our live stream. Just a reminder, please get in touch through our various contact channels. Just before we close, I'm not sure, maybe I would like to call Ms. Abrams to just come up again for the closing remarks. Thank you.
Thanks, Simbani, and thanks for a job well done. Colleagues, once again, members, let me say thank you for your time. Thank you for coming out and sharing the morning with us. It's always a great honor and privilege to share the results and account to you as the owners of this fund. And so we're pleased that we could have this time with you. As we get closer to the calendar year end, let me take the opportunity to wish you and your families a blessed festive. I do hope it's a time of quality and time with loved ones, family time, and it's going to be a peaceful and safe year. We look forward to seeing you in the new year. And please engage with us. Please send us your emails. Please contact us. All of that just builds a better relationship with us. So we look forward to the new year. Be safe and God bless. Thank you.
Thank you so much, Mr. Abrams. One of the greatnesses about humanity is the ability to care for one another. And with that said, we'd like to, as a Mpumalanga team, we would like to thank the executive team for coming up here to Mpumalanga. It really was great to hosting you today. And it also did demonstrate to our members the excellence and care in leading our fund to the next 75 years. Thank you, executive team. And a reminder again, please, there's a slide that will come up. Please reach out and be in touch with us through our various contact channels. And on that note, I thank you for those that are staying on live stream. Siyabonga. Rialebuga. Paya Danki. Thank you.